Hello, hello, and welcome. I think now the stream is back on. We just had a little bit of internet issues, but now it's back. So, welcome back to the stream. Let's double check if it's live or not, real quickly. Yep, and it's live. Good, good. Welcome back to the stream. Sorry for I had internet issues, but now it's back. So let's continue to talk about what's been happening. So right now, Bitcoin is sitting at around 86,000. Let's mention what happened and why it dropped very hard. We were talking about the specifics, how it went down from here. We said at the start of the stream itself that if it reaches this specific zone, it will drop pretty hard, and it actually did when we started. So if we look here, I actually should zoom in more. Uh, around this specific price level, 87,800, we talked about the specific liquidity sweep area, and that if it breaks this liquidity sweep area, it will liquidate a lot of other positions. So then after it did that, it will go down pretty significantly, and it went down very, very hard, a lot harder than we expected. I thought it would stand around this area, but because we can see also another small liquidity sweep and another one over here, it liquidated pretty hard. So going all the way down to $85,800. Same thing around here. It's sitting around between both of these positions because there's a lot of like liquidations technically at the under this specific price point, like 85,400. And now it's driving back up to around 86,000, which is a pretty significant interest, like pretty interesting, kind of where it started as, exactly where the price started as in the since the market opened. But the interesting is that, like, also in Trading View itself, it does not really say. There isn't any new articles that happened. The last article was nearly 2 hours ago, and it's talking about like why Ethereum, like Bitcoin, XRP are like failing. But as we can see here, the price right now is sitting at around 86,230. We don't see any liquidity sweeps that we saw before, like indicators similar to this or similar to this, which would, yeah, we actually saw one at the bottom here that was pretty new, but there wasn't any other one that we saw which would drive the price to that certain level. So now we just have to kind of wait and see, because now the price is basically uncertain and trying to like stabilize around this specific price level. But right now there's basically equal amount of buying and selling momentum. Hello, hello, and welcome back to the stream. But yeah, there's now a similar amount of buying and selling volume. I'm using right now like two indicators. I'm using the Lux algorithm liquidity sweep indicator and the liquidation level indicator as well. So basically, the liquidity sweep indicator, it shows you where a lot of liquidation levels are, which are around, like for example this specific one that we talked about. However, the liquidity sweeps indicator will show you where the like buying and selling liquidity sweeps are, liquidation levels are. So if it hits this specific part, for example, it liquidates some contract. So after it liquidates the contract, it like even drops the price more, because or like makes the price go even higher depending on if it's a long or a short contract. But yeah, another price sitting around 87,200, and we were also in the previous stream we were discussing really about the what's it called, the Trader View article itself, and it's talking about the correct way to engage with this kind of analysts is to ask different like questions as well. It's also important to understand that no serious macro analyst believes the market moves in like straight lines. Basically, even if Bitcoin were to enter a strong upward path, the path would almost certainly include like volatility, pullback, and periods of like consolidation. So any narrative that implies a smooth 90-day ascent is unrealistic. So what the GMI chart I really highlighted highlights is the asymmetry that can emerge after extreme momentum resets. So when selling pressure becomes exhausted and positioning cleans up, upside risk can increase relative to downside risks. That is a statement about like distribution, not density. So, so the article itself is not really saying that it's not really is less about the 180,000 mark, but more about like the market psychology, like washouts, like feel terrible when they're happening. They create doubt, fear, and like disbelief. So historically, those emotional like environments have sometimes preceded like strong recoveries. Sometimes they haven't. The difference is control. Hello, hello, and welcome back to the stream. Yeah, we just had like a bit of internet issues a little bit ago, but yeah. So the price now is sitting around 86,300, which is very interesting. It dropped hard. It's basically almost exactly the same, maybe like just yeah slightly higher than the starting price from the market open, but the price kind of just stabilized around this specific area because even when we were streaming before the stream cut off, we were talking that the price will actually stay around this specific zone because there is a lot of liquidation at the very bottom. Yeah, what happened just now? Right now there isn't much volume. There isn't much going on, but it got liquidated pretty. Like a lot of liquidations hit very quickly, like $130 million worth of liquidations, literally just because we had the basically the indicator that told us that it will get like it will hit a very strong liquidation zone, which it did over here, and then it went all the way down here, which it hit even more liquidity indicators at the bottom here, which liquidated even more to reach this specific level to this small liquidation zone, which reached like 85,500, and then after that the price started to pack up because we can see the volume is mainly buying instead of selling. So right now we're just waiting for any new like kind of indicators. We can kind of see a little bit of we can kind of see a little bit of what's it called, a little bit of value gap at this area, which kind of happened here. That's why the price kind of went down because but this is also like kind of a fair value gap, but here there wasn't much liquidation happening. So yeah, this is very interesting. It's around 86,456. But yeah, so macro conditions, for example, liquidity flows, regulatory developments, and like broader risk sentiments will ultimately determine whether any historical analog holds technical indicators like can frame the discussion, but they cannot really resolve the actual issues or anything. So when people like ask whether Bitcoin is going to like 100,000, 180,000 in 90 days, the only honest answer is that no one really knows. But we can be what can be said as factually is that a macro researcher highlights like a historical pattern where similar momentum, basically conditions, were followed by strong rebounds, and if such a pattern were to repeat with similar magnitude, prices would be much higher than they are today. So that's basically just the full claim of the article that we were talking about. This is very interesting. Now the price is around 86,000. We said it will stabilize around this specific area. So it's very interesting right now. Hello, welcome to the stream. It's around 86,400. So it's still kind of gaining a little bit of momentum since we were discussion, and we can actually there's another article that in Trading View that's speaking about why all of this was happening. not this specifically, but why the momentum of Bitcoin and Ethereum and XRP and other major digital assets are like retreating, even as some key macroeconomics indicators suggest that inflation is like cooling and central banks are like cutting interest rate. So at first glance, this seems contradictory. After all, lower inflation and easier monetary policy are traditionally supportive of risk assets. Yet we are seeing weakness in crypto prices. To understand what's like actually happening, we need to look beyond simplistic narrative and examine both the macroeconomic signals and the market's real-time behavior itself. So the article that we were talking about is like saying that Bitcoin, Ethereum, and XRP were trading like lower despite positive economic news. It notes that the total crypto market value fell about 2% in the last like 24 hours. It did actually, but since the market opened now, it's like a little bit positive. It reached all the way to like 90 something thousand, and now it's all the way down to 86,300. But now with like Ethereum and basically XRP also losing, but now Ethereum is actually kind of just around where it started as well. Now, the piece suggests that investors remain cautious and are selling like risk assets, though inflation data and interest rate cuts normally could be considered supportive for crypto markets. So yeah, now the price is sitting at around 86,340, which is very interesting. We cannot really determine exactly where the price is going right now because it's very, very stable, for at least for the past like 10 or 15 minutes. but yeah, after that, we will see if there's any new indicator similar to this or similar to this that will say whether the new basically way the price is going or heading towards. But yeah, we can kind of also like close this and we can check other basically sweeps as well. Yeah, there's not any sweeps that are happening right now. But yeah, there isn't a lot of liquidation events that are close by. The closest one at the very bottom here, actually at the very top as well here. This is a buy. I'm pretty sure this is the shorting closing area. So now the price will just probably hover here for a pretty decent amount of time until there's a pretty big liquidation zone, which then will drive the price towards that area. And then we can kind of determine whether it's gonna continue or is it gonna go down. So the price is just stabilizing around the 86,450, literally exactly the same. Now let's parse this like step by step. Like first, what does it actually mean when inflation cools? So and rates are cut. In simple macroeconomic terms, lower inflation, especially when it comes to in below expectations, relieves pressure on central banks to keep interest rate high. So lower interest rates make borrowing cheaper, reduce the opportunity cost of holding non-yielding assets, and historically have been positive for risk assets like equities and credit. Many investors extrapolate this logic to cryptocurrencies, assuming that if money becomes cheaper and financial conditions looser, assets with higher risk profiles like Bitcoin and Ethereum should benefits. Yeah, this structure feels bearish today. It is actually. It is pretty much a little bearish. But right now we can still see where it's going. We can still see that it's kind of positive since at least like 20-30 minutes ago, where it was basically very, very low at 85,000. So it's over 1,000 higher than an hour ago or so, or 30 minutes ago or so. But yeah, the reasoning has a logic to it, but it also contains like hidden assumptions. One of those like assumptions is that news about inflation and rate cuts translates immediately into liquidity and risk appetite. But in reality, markets often require clear confirmation that monetary policy will be accommodative for an extended period, not just that inflation has lowered recently. In this case, recent inflation data from the US showed prices rising less than expected, with the annual consumer price index at 2.7% in November compared to a forecast of 3.1%. This was taken as evidence that inflation is cooling and could allow for rate cuts in 2026, which initially caused a short-lived bounce in crypto prices earlier this session. But yeah, we can see the price right now is around 86,430, and it's stabilizing around that. We kind of seen that it's gonna be around that for a little bit at least, because there's been a major like a downshift in the price. But yeah, we can see there isn't much like liquidation that's at the top or at the very bottom right now, because a lot of people are uncertain about the price. So when people are uncertain, you can see the volume is a lot less, and most candles are very equal in buying and selling. So this is why it's very interesting. And the price now, rather than gonna go down again. Yeah, it could, but we can't see any like kind of indicators. You can see that there is a little bit of liquidity at the very bottom, but the thing is, there's also like pretty huge liquidity at the top here, but it's very hard for it to go after what just happened back to 88,000. But there's a lot of like liquidity at the very bottom here, so it's more enticing for sellers to even short the price again, to reach this level and liquidate even more, because they liquidated like $130 million literally right then and there for like literally a 10-minute or 15-minute yeah, around 15-minute price, 15-minute time frame. Yeah, but the price right now is kind of going up a little bit. It's being steady, holding around 86,500. So the thing is with Bitcoin right now, the bounce was like kind of fleeting. Ethereum and XRP all fell back after like initial spike as well, which highlights a critical point. Crypto markets are not driven by macro data in a mechanical way. Traders look not just at raw data points, but at what those data points imply about future monetary policy. So liquidity conditions and like risk sentiment. So in this situation, traders began to question whether like the inflation data was actually strong enough to shift the trajectory of the Federal Reserve policy. The conclusion in many trading desks was that while inflation is cooling, it may not be enough to trigger immediate or deep rate cuts, especially given mixed labor market data and uncertainty over like future Federal Reserve action. So it's very interesting. And you have to like kind of look at the price right now. It's around 86,500. It's been very stable, as we mentioned before. There isn't really much change, but you can see from the area here, there's so much liquidation that happened in the last like hour or so. But yeah, you can also see it better if you kind of study a liquidation heat map. And if you do that, it will even show you the current amount of liquidation compared to what like actually got liquidated already. But for me right now, I'm using the liquidity sweeps Lux algo, which kind of shows these small liquidation sweeps, and they're similar to like here, and here, and as well as at the bottom here, which is kind of like shows it even before the price hits that specific mark, and it will tell you that, oh, if it hits this specific mark, it's most likely going down. And that's what we kind of like saw at the start of the stream itself. But yeah, right now price is sitting at around 86,400, and it's been here for a pretty long time, hovering around exactly where it started, literally the trading session today, literally around here. or like since the market open. But yeah, the article actually said that this leads to like the first major truth about crypto price behavior, like saying liquidity and monetary policy expectations matter far more than individual data points. So a cooler CPI print alone doesn't guarantee easier financial conditions. It simply increases the possibility of future rate cuts. So traders price markets based on what they believe will happen next, not what has already happened. In this case, although inflation cooled, markets remained unconvinced that a sustained easing cycle is imminent. So, particularly given mixed employment data and that hesitation is keeping many investors on the sideline. But yeah, Bitcoin is actually like going up pretty significant right now, pretty significantly after the crazy downfall that it just hit. It's hovering around 86,600. With you can see now, okay, this is good. So you can see now another liquidation zone at the very top here for the short positions. So all of these short positions are trying to liquidate at the very top here. That's why it did not really reach this specific level from the previous couple minutes, because a lot, when it tried to reach this level, a lot of short positions sold. So they basically like lowered the price or added made more contracts to lower the price. Yeah, see, now it will drop even higher a little bit. Yeah, see, it got became a little bit higher because it went through another basically contract right there. What's it called? Liquidity sweep. So it went pretty high, around 86,700. It was showing that it will be around here. But yeah, the price now is sitting around 86,700, which is nearly 0.5% more than what started, which is pretty decent, but still. But still, it's still very, very a lot lower than where it reached a little bit ago. It's around 86,700 now, because there was a liquidation position. You can see that showed around here. So when it reached this specific area, we knew that it will even continue to go up more, because it liquidated other short positions. But yeah, the price is sitting around 86,850, which is pretty good. But the price now is is insane. It reached a pretty high, significant level, and we can see from previously the amount of people that got liquidated over here was $130 million worth of liquidation. And because they hit all of these basically liquidation levels, or like liquidity sweeps, they're like basically they got liquidated immediately, going down to this price level. Also, after hitting this specific liquidity sweep as well, it hit this one, and then at the very bottom there was another one which triggered the price to go all the way down to 85,400. But we can see right now the price tried very hard to reach like 86,000, like 900, but it failed to do so. So now we just have to wait and see where the new basically the new like liquidity sweeps are, and where the liquidation levels will be. But because this is very uncertain, and you can see the trading volume isn't really as much as before, a lot of people aren't really going in as hard, so they're taking their sweet time to do any certain trading, any levels of high amount of trading. So a second important point that I wanted to actually talk about before is that downward price moves in crypto are often amplified by forces like forced liquidations and leverage dynamics. Literally exactly what we saw here. These are leveraged positions and forced liquidations. Like this, for example, is forced liquidation. This one also is a liquidity sweep. So a lot of people got liquidated from this specific area, for example. That's why the price went down immediately very, very fast. So when leverage positions are prevalent, traders borrowing to buy Bitcoin or Ethereum, a drop in price can trigger liquidations, which in turn accelerates selling pressure. So forced liquidations in the market reached hundreds of millions of dollars within a short window during the most recent sell-off. And this type of mechanical selling pressure that often overwhelms macro oriented signals. So even though this liquidation, for example, did not reach all the way over here, but because it reached pretty low, it triggered a lot of selling, which then triggered more liquidations at the very bottom here, which then also did this exact same thing multiple times before at least stabilizing a little bit here. But yeah, the price right now is around 86,600, which is very interesting. It's at least going a little bit high to where it kind of started since the market open, but it's still very, very low compared to the very high that we've seen, nearly 89,000 actually. It reached 89,500, but yeah, right now it's sitting at around 86,000, so nearly a $3,000 difference since the highest high that we saw today. But yeah, the reason why there isn't really any new indicators that are showing is because of how uncertain it is right now. Because this is very uncertain on where the price is going to try to go all the way up here or try to go all the way down here, we still don't know, like we still can't see where the price is going right now. So yeah, how do you read those market? Okay, this is very interesting. So you can see that that the price, for example here, this for example is a an indicator that I use. This indicator is called a liquidity sweep indicator. This is saying that a lot of people bet and saying that Bitcoin will go up. That's what they're saying over here. So when the price over here reaches this specific point, for example over here, you can see that this indicator will liquidate all of these people that said the price will go up. So after they liquidate those people, because there was a lot of liquidation happening, and because there's even more indicators at the very bottom that are saying that there's more liquidation, the price went all the way down here, which then triggered the exact same thing at the bottom here and over here as well, if you can see it. Then after it did that, it reached all the way to the bottom here, which there was another indicator that I don't know if you can see or not, but it also triggered another liquidity sweep, which then triggered a little bit of buying after that, because there was a lot of loss that happened extremely quickly. Okay, perfect. We can see now the new indicator, the new liquidation levels basically over here. This is the first and this is the second liquidation level. This is the shorting liquidation level. So, and this is the logging liquidation level. So over here, people are saying that the price will go down here, and over here are saying that the price will go up here. So if it reaches this specific area, these people make a lot more money, you know. But the same thing could happen to the opposite side. If the price reaches this area, because these people basically said that the price will go down, they will get liquidated and lose their money, because that's what like a contract is happening. So I'm scared to enter a trade right now. Yeah, it's very uncertain right now about where the price is going, because you can see the liquidation levels are insane right now. The market is very stable around this specific area. But yeah, if it reaches like over here, then it will try very hard to boost the price to go all the way down here to liquidate this price. that's kind of when you can like step in and check like, oh, this might be a perfect time to go in or not. But yeah, same thing if it's up here. If it's close to where the liquidation is, a lot of people will try to like long the price, long the market for the price to go even higher over here. So right now it's sitting around 86,600. And we said that like forced liquidation in market reached hundreds of million like a little bit ago. But another like dynamic at play is profit taking and rotation of capital. After strong gains earlier this year, some investors lock in profits rather than immediately reinvesting. This means that even positive macro news may not instantly translate into like buying. So instead of capital can rotate out of crypto into other assets or into safer positions, which puts downwards pressure on prices. But yeah, now because the market is kind of unstable, we can't really tell which candlestick or which way the candle is gonna go. We can see that right now the price going here is like easier than the price going up here, which we can see, which we can say that like if the price arrives around this specific area, it will reach this specific zone, or will try very hard to hit this specific line to liquidate this position over here. So that's what that's what a lot of short positions want to do. So, for example, beyond macro leverage, macro and leverage, there is also issue of market positioning and sentiment. So, cryptocurrency markets have been under pressure in recent weeks, with Bitcoin like even right now around $86,000, and several altcoins following that downwards trajectory in a risk-off environment. Traders often reduce exposures to like volatile assets, not because fundamentals have worsened, but because risk tolerance changes. So when big players reduce positions, the market interprets that as a signal to be cautious, which can create a feedback loop leading to further selling. But yeah, we can see the liquidation bubbles here are kind of like it's closer to this specific liquidation bubble. So if it reaches around this area, it might try very hard to like liquidate this specific position, or like these like bubbles, so which is like a big liquidation area. Of course, not as big as before because the trading is kind of like slowed down like crazy. So not a lot of people are like betting or like putting in basically putting in contracts to say which price is going next. Yeah, the move got me confused. Yeah, it's very confusing right now. But actually, at the start, we knew what was going to happen, we understood what was going to happen. But now it's very confusing because there's like instability technically. It's kind of because now it's stable, so not a lot of people know where the price is going to go. So we cannot like say, oh, the price now is going to go up or like the price is going to go down. We still have to wait to see which specific area it will try to reach first, and then if it almost gets it around like maybe here or like here, then it will try to liquidate this liquidation bubble. So it will try to like even hit this specific area. Same thing for the bottom. If it reaches close by, it will try very hard to liquidate this specific area. This is kind of where the two main points that we're waiting for to see which specific way it will go. Right now there's a lot of selling position, but there's pretty much equal buying volume as well. That's why the candle is very equal here. We saw the previous candle already reach 86,300, and now it's at 86,400. But yeah, there isn't really much new over here. You can see that there's a lot of like liquidation at the very bottom or top. This is like basically the buying and selling liquidation, the short and long liquidation over here, liquidation bubbles. This is like what's it called, liquidation levels at by Leviathan. It's basically on it's an indicator in what's it called, in trading view. This is what basically I think is very cool about that. And the other one is the Lux algorithm liquidity sweep. So it also like shows you where the liquidity sweeps are. So this is where price is trying very hard to go to. But yeah, it's also worth like noting that price that basically macro global conditions aren't like uniform. While some economies are easing, others aren't. For example, discussion in the market about possible interest rate action from the Bank of Japan or the Bank of England introduce additional uncertainty and fragmentation in global monetary policy. This patchwork of signals can create confusion and reduce broad-based confidence in the global risk asset. So what confounds many traders is the assumption that cool inflation must immediately reduce interest rate and spark buying. In practice, central banks move cautiously even when inflation slows basically. So central banks may opt to pause or take a gradual approach to rate cuts, especially if other indicators like labor markets remain mixed. This means that markets sometimes price in a 2 to 3 rate cut, so a scenario that never like materialize, and that creates volatility and retracement in assets like Bitcoin or Ethereum. But yeah, now the price is around 86,300, which is very interesting. It's been like actually very steady in the last couple hours actually. Actually not a couple hours, but like in the last hour or so, it hasn't really had much change. But we kind of saw that the price will go down from the top here, so that's kind of the first like thing that we can kind of know. But after this is very interesting because this looks pretty much like a fair value gap. But because there's at the bottom here, there's a liquidity area. This means that this fair value gap is very, yeah, see, we can kind of see that it's uncertain because a lot of people will still try to buy so they don't get liquidated at the very bottom here. But yeah, there's also like the psychological aspect of markets. So when price have drifted down for weeks, traders become conditioned to selling rallies. Short-term traders look for any reason to reduce exposure, and they often use macro news as an excuse rather than the cause of price move. This dynamic alone can keep prices depressed even when fundamental news appear positive on the surface. Yeah, so we can see right now we couldn't really, because we think it's like a fair value gap because it was very uncertain about where the price is going, because there's now like a basically long positions that are gonna get liquidated at the bottom here, so they bought more positions to try to hit the price at the very top to liquidate the opposite end. But yeah, price right now is sitting around 86,500, and understanding these market dynamics require a sense of scale. So when we talk about inflation cooling, this is a signal about the potential future path of monetary policy, not an immediate change in liquidity. So, like the Federal Reserve and other central banks operate with a lag. They respond to trends over months, not hourly market shifts. So, meanwhile, like crypto markets can react in real time to speculations about what those policies mean for risk assets. The result is often like whipsaw behavior. So, positive macro signals trigger short term rallies, which then reverse amid uncertainty about future policy directions. So you can see here the price, the price is around 86,000, and it's very stable in the past like 30 minutes or so, with not much change because the new liquidation zones are very close by, and because there isn't much trading volume that's happening right now. You can see like compared to previous trading volume, it's actually slowing down a little bit. Yeah, so the price is kind of hovering in the middle right now. So like to accurately like kind of interpret why Bitcoin and Ethereum and XRP are falling, even as inflation cools and rates are cut, it's helpful to break down the difference between news impact and policy impact. So for example, macro news like inflation data or a single rate cut influences expectations, but true policy impact, meaning actual changes in monetary conditions that affect like credit, liquidity, and risk allocation, happens over longer cycles and with like repeated signals because traders are trying to like price in future conditions. The mere possibility of future cuts isn't enough really to drive sustainable rallies. Yeah, the price is extremely like stable around 86,500. It's been like that for the past like 30 minutes, and there isn't really much indicator that we can use. You can use like simple other trading strategies, but I would suggest if you're trading, you should only use like one or two strategies and like one or two trades a day. You should not do like multiple trades. For example, before when we saw here, you could have just liquidated at the very top here, or you should have just took a short position at the very top here. That would have been very nice because we saw that the position at the very top here is, what's it called, is like a liquidity sweep, which meant that like the price will definitely go down if it hit that certain area, which it did. But yeah. So in crypto, this effect is often like magnified because many participants use leverage if market anticipate easier money, but then doubt those expectations even slightly. Positions get unwounded and prices can fall sharply. Forced liquidations also, margin calls and stop losses all contribute to like downward spirals that are often mistaken for fundamental weaknesses when in fact they are mechanical effects of positioning. So another element we need to consider is the difference between like headline inflation and core inflation. So headline inflation, for example, includes all prices, while core inflation like strips out like volatile food and energy costs. So markets pay close attention to core inflation because reviewed as a more stable measure of underlying inflation pressure. In recent data, core inflation showed subdued growth, which helped fuel hopes of rate cuts. However, traders ultimately want clarity on the path of monetary policy, not just isolated data points. And in the absence of like concrete policy changes, selling pressure continues. But yeah, we can also say that the price right now is around 86,488, which is very interesting. We kind of called that it will stay here for at least a little bit because the amount of volume isn't that much, and because the liquidity level for both the buying and the selling is very equal, like very small and far, so it won't really move, not far actually, but pretty close, so it won't move as much because the volume is like slowing down very fast. It's similar to what happened before here. We can kind of see how these trends are very like close to what happened. You see at the very top here, it went all the way up and then it slowed down at the very bottom. Similar to what happened here, it went top again, but it's kind of went very quickly, and then a lot of positions got liquidated. Even old ones from the back here got liquidated pretty hard. And then here it hit basically it hit a very big liquidation spout, which liquidated a lot of positions all the way to here, and now it like stabilized around this area, which is basically where it has been for the past like 20 or 30 minutes now. 20, actually 30 minutes. But yeah, the price is sitting around right now 86,500, which is very interesting because it's kind of almost like I think the price started around 86,200. That's where the actual market open price at. But right now it's slightly just above that by a little bit. So technically the day isn't really bearish, but it's very, very confusing about what happened all the way up here. There's so many liquidations going up and down. But if we're looking at it actually pretty significantly, it went from 86,000 all the way to 89,000, and at the bottom here it went from 85,000 to 86,500, and went all the way to 87,000, 86,500. So yeah, it's pretty accurate to what we kind of saw here. What I'm using over here is basically two different analysts, like indicators basically. The first indicator is the liquidity sweep indicator, and this is my favorite indicator. It's such a great indicator that shows you where the price actually is fighting to go to. That's why the price, for example, over here is trying very hard to go to this specific area, and that's why a lot of buyings happened over here. And then a lot of selling happened to try to lower the price to hit this liquidity sweep at the very bottom here, which then hit multiple other liquidity sweeps. Even at the bottom here, there's another one, which then basically liquidated all the way to 85,000. And now it's sitting around 86,621, which is, a little bit, actually pretty much a little bit over, almost 0.5% over to where it started from the market open. But yeah, we can see that it's kind of interesting where the price is right now. Hovering around 86,618. But yeah, the price will try to mostly hit one of these two key points. Of course, it's either long, like going up or down. But the main thing is that if it hits either of them, it should theoretically, if it reaches this specific area, for example, it will try very hard to go even more up to liquidate this positions, for example. Same thing to going down. So if it reaches a pretty low level, it will try to lower the position. It will try to, if there's a pretty low level at the bottom here, then it will basically try to lower even, go down even more to around like 86,100 to basically break this liquidate this position as well. But yeah, we were talking about one article in what's it called in TradingView, saying that one of the biggest reasons crypto markets can fall, even when inflation cools and rates are cut, is that markets don't trade on what happened; they trade on what they think will happen. So, what happened next? So, by the time inflation data is released and rate cuts are announced, expectations have often already been priced in. So, traders spent weeks positioning ahead of those events. When the events finally arrive, the question immediately becomes whether the outcome was good enough to justify higher prices. Even if it isn't, markets sell. But yeah, we can see here the price is around 86,000, trying 86,600, trying very, like, it's very, very stable. It's been very stable for the past like 30 minutes. So it wasn't really a good idea to enter at any time, because we don't have any like indicator that's telling us where to go. But we can see here that if the market slightly reaches almost this areas over here at the very bottom, it will try very hard to push all the way down to here, for example, so then it liquidates this position. That's kind of what happens for most of the time. So so you should like double check which strategy you want to use and which indicators you want to use, and which programs you want to use as well. So in the case described in the Coinpedia article that I was talking about, inflation, like basically cooling inflation and rate cuts, did not come with a clear signal that monetary policy would turn aggressively accommodative for a sustained period. Instead, the message many traders took away was that while inflation pressure may be easing, central banks remain cautious and data dependent. That uncertainty is enough to prevent risk assets like Bitcoin or Ethereum or an XRP from attracting fresh capital in size. So another important factor is that rate cuts are not always bullish in isolation. So rate cuts often happen because economic growth is slowing or because financial stress is emerging anywhere in the system. In those scenarios, rate cuts are reactive, not really like stimulative. So markets sometimes interpret them as confirmation that something is breaking rather than as an invitation to take risk. When that in the interpretation dominates, capital flows towards safety rather than speculation. But yeah, the price right now is sitting around 86,500, and we can't really call where it is because the market move already happened a bit ago. So now it will probably be around that for a pretty decent amount of time, unless it shot sharply to anywhere around of these two positions right there. So the price right now is around 86,400. And the indicators that I'm using right now, I'm using like multiple indicators. I'm using the liquidity sweeps Lux algo indicator, which is very interesting because it shows you where the liquidity sweeps are. So for example, over here, it liquidated a lot of positions. That's why it hit and basically hit all the way down here, which then liquidated even more positions, similar to what happened down here. And also at the very bottom here, there's another one that did the exact same thing. But then after that, price tried to hit up because there was a lot of like basically long positions liquidated around $130 million. In fact, in just basically like 30 minutes. So the article says that this distinction matters a lot for crypto. like Bitcoin and other digital assets, tend to perform best when rate cuts occur alongside expanding liquidity, strong growth expectation, and rising um, raising risk appetite. They tend to struggle when rate cuts are associated with economic uncertainty. Indicators have been criticized. Yeah, they do, but like you kind of have to know what the indicators that you're using are, because for example, if you use an indicator that's telling you, oh, the price is going up or the price is going down, it's not really a good indicator. You have to like understand why this indicator exists and how what it means behind it. For example, like as I said before, a lot of these indicators are very like informative, and it shows you where the price is trying to go. Let's take for example, because we showed this one as multiple times, let's take like other indicators, for example, like over here, you can see this indicator showed where the price wanted to go. This is where first the price wanted to go at the very bottom here, and it almost reached it pretty quickly around this area. But after a little bit of trading, a lot of buyers stepped in because they will get liquidated over here. So they added more contracts, which then drove the market more up. But even after a long time of stabilizing and almost even reaching the opposite side of the liquidity area, they also got hit at the back here, where they got liquidated immediately and again liquidated again, which dropped the price all the way down here, even though at this area buyers also might have tried to buy. So this is kind of why I think indicators are pretty like this specific indicator at least is pretty interesting, and it kind of makes sense for me. So you also have to use your own indicator and check which one works for you and which strategy that you also use for yourself as well. For example, let's see here. You can see that there's a a small liquidity sweep over here. What does this mean? This means that, for example, if the price, yeah, let's see if it happens. So if the price reaches this area, the liquidity sweep over here, so if the price reaches this area, is saying that the next price, like around the price will be around this area. So it will be even lower because a lot of people got liquidated here. So we have to wait and see if the price actually actually reaches this area. And that's why this liquidity over here, this is showing where the price is trying very hard to go, this specific level over here. So when if this price reaches this specific level, maybe around here, slightly lower, because it's usually slightly lower than it, yeah. So now it should even go a little bit more down, just a little bit more. Yeah, it shows that it's going down more. This is what it means basically. So while some indicators might say, oh, it's gonna slow down, we just saw it live that this indicator specifically is telling you that, oh, this is where a lot of liquidity is. So when you see it hovering around this area, like what we saw like a minute, like a couple seconds ago, the price even went even more down because a lot of people got liquidated at this specific area. But yeah, so now the price is kind of hovering between these two levels that we had before. These two levels that we had before that we were talking about. This is just a little bit of a liquidity sweep. Yeah, it doesn't make sense really. So you can see it because it got liquidated, so it went down because this is a long position liquidation. So this position, yeah, we literally just called it though. We literally just said that it's working, and it is working. We said that if it reaches this area, it will go down, and right now it's basically very much very down. So this, for example, what this position means, what this indicator is showing you where the liquidity is. So, or not really the liquidity is, but where the liquidity sweep is. So it means that if it reaches slightly under it here, it will liquidate other positions, so it will drive the price even more down. Because these are like people saying, oh, the price is going up, so I will put money to say the price is going up. But the price didn't go up, so they lost their money because they said that the price is going up. Yeah, this is very interesting. You can see that it literally is going down very, very fast. Now what's happening right now is the take profits. These are people like are just the stock, like the short positions are, oh, it actually liquidated the other price as well. Whoa. Okay. Yeah, this is very interesting. I didn't think this would hit all the way over here. I thought it will end like around this area, around this candle, but it didn't. It went all the way down here, which is very interesting, and it's probably even closer to other liquidation positions actually. But yeah, oh, it's dropping like crazy. It might even drop under 86,000. But yeah, it might even mostly just because this liquidity at the very bottom here. Yeah, it's gonna probably drop under 86,000 right now. But it's very, very interesting that the liquidity just hits so quickly. It hits so quickly. Like we saw this and we knew that if it hit right under it, we will like it will liquidate a lot of positions. And right now it's still literally was under 86,000. So we kind of understood that. We kind of saw that coming realistically. So another layer to this is timing. So monetary, oh, it's going a lot lower. So right now it's nearly 0.5% lower than where it started. So now we're basically, it's losing money uh, since the market is dropping very quickly around 85,900, which is very interesting. It even will try to liquidate other positions at the very bottom here. But yeah, this is extremely interesting actually. Um, Another layer, as I was saying, is timing. So monetary policy works with long and variable lags. So even if rates are cut today, it can take months before those cuts translate into easier credit conditions. So higher lending activity or increased speculative flows. Crypto markets, on the other hand, move instantly. So this mismatch in timing often leads to short-term disappointment after seemingly positive macro news. So there's also like the issue of real rates versus nominal rates. So a rate cut doesn't automatically mean federal financial conditions are loose. What matters is a relationship between interest rate and inflation. So if inflation falls faster than interest rate cuts, real rates can remain elevated or even rise. So high real rates continue to compete with non-yielding assets like Bitcoin. So this dynamic is rarely discussed in crypto circles, but plays a meaningful role in capital allocation decisions. Right now, Bitcoin is under 85,800 right now, which is very, very interesting. It already liquidated this position that we were seeing, this pretty large position, and there's a lot of selling that's going on right now because a lot of people got liquidated from this specific zone. Yeah, just very, 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 very informative right now. And it's going down even lower than what it reached the very bottom here. It's actually like 80, almost there. Just one more candlestick away, but it kind of makes sense after the liquidation that happened at the very top, and now it's a lot of people are fear selling. Basically, they're selling their positions because they're afraid of the basically losing their all their uh, yeah all their contracts. But like as I was saying, Market structure, like within crypto itself, also matters. Bitcoin, Ethereum, and XRP don't trade in isolation from each other. They're like they're part of a tightly connected ecosystem where liquidity, leverage, and sentiment spill over rapidly. When Bitcoin weakens, altcoins often fall under. When Ethereum struggles, it affects DeFi, NFTs, and layer 2 ecosystems. So, like XRP, despite its unique use case narrative, for example, still trades largely as a risk asset during broad market moves, which is very interesting, even though XRP is used for a lot of other reasons. So leverage amplifies all this. So during periods of optimism, uh, leverage builds quietly, funding rates turn positive, and open interest rises. So traders increase positive sizes. When price stalls or reverse, that leverage becomes a liability liquidation. Liquidations don't care about like inflation data or rate cuts. They are automatic, like mechanical and indifferent to narrative. So once liquidation cascades begins, price can fall rapidly regardless of like macro headlines. This is why you often see like crypto markets fall on good news. Doesn't like Good news doesn't remove leverage itself. It doesn't reset positioning. It doesn't instantly change risk tolerance. In some cases, good news is the catalyst for traders to take profit or reduce exposure because expectations were already stretched basically. So yeah, look, the price right now of Bitcoin is around 86,000, and it's nearly basically a quarter or 0.3%, 0.3% of the difference as the start of a loss. If you look at Ethereum, actually, it's following a similar trend, but it's still at least around the same, like almost the same percentage wise. But it dropped also very hard at the top here, and because Ethereum is following the same price trends as Bitcoin as well, as we talked about, it's in the same like bubble area. This is why the prices are very similar. But yeah, we're looking at Bitcoin USDT, and the thing is we can kind of see how interesting it is. Like literally just the liquidity sweeps area is. It literally just shows you where the money is going, and it's trying to go, at least. Similar to what happened at the bottom here, and also what happened here and here as well. So this is a lot of like the same basically thing just repeating over and over. And now we can see the new even smaller what's it called, actually never mind, it's pretty big, the bigger like liquidation levels. So we can even see the liquidity, the volume is pretty high compared to before. But because a lot of people got liquidated right now, so a lot of people might try to buy it again around 85,950. So now the two target prices, we saw before that the target, if it reached this specific area, we said that even if it reached this specific area, it will try very hard to go even more down to that price. Same thing is like around this area. If we see the price even going up to, for example, this certain specific zone, like around this specific area, it will probably try to even hit even more all the way up, similar to what the bottom zone is as well. But yeah. So Bitcoins are now sitting around $86,000, and it's been like that, hovering around that price. But yeah, that's going to be it for today's stream, guys. I hope you guys enjoyed it. If there's anything, you can send me next time. But thank you guys for watching. Make sure to like, comment, and subscribe. Yeah, and we will see you like next time.